We have a special guest with us today, Nithya Balasubramanian, who's spent a decade and a half in the healthcare industry. She's the Director, India Healthcare at Sanford Bernstein, and looking forward to having a conversation with her, given the kind of interest we've been seeing on some of those pharma and healthcare names of late. Nithya, thanks so much for joining us.
Oh, thank you for having me.
So Nithya, let me start off with getting a sense from you on where we're at in the cycle. Do you feel that pharma is all set for a re-rating, given what the industry has seen over the last 3-4 months?
Absolutely. I think we're definitely at a very exciting inflection point for India healthcare and pharma in particular. I think if you look back over the last 3 to 4 years, it has actually seen a significant derating, right? We saw EPS shrink, a lot of headwinds, both in the US as well as the India market. I think now is the time when we're actually going to see a step improvement in the growth that's coming from the US generics. And in particular, I want to highlight that one of the important themes that I see playing out in the future is complex generics. Now, these are the products which are very difficult to make. There is likely to be limited competition and therefore a far more sustainable profit pool as well. And I do expect large companies like Cipla, Lupin, DRL to an extent be able to ride this wave and start posting good EPS and good EPS growth in the near future. Now, I think you did talk about the fact that the markets run up a little bit in the recent past, and it's a COVID-triggered rally. And I think it's a fair understanding that the market has that the demand is far more resilient compared to, let's say, some of the other sectors. But I firmly believe that there is definitely room beyond the re-rating that the market has already seen, which should come from more and more of these complex generics materializing in the near future.
That's interesting, Nithya, and you touched upon the kind of potential growth as well for some of these names, particularly given the US market and demand there. I want to talk more about that. Do you feel that pricing power is going to come back for some of these pharma names? Do you see, when you're talking about growth potential, what's the kind of opportunity that we're looking at here?
So on pricing, I think one thing the market must understand is price erosion is the norm, right? But what I do believe is that the worst is behind us. So we saw price erosions at negative 20% levels in 2017, and that was the nadir, right? I don't think we're going back to that scenario anymore, because your distributors consolidation, that is already played out. And with 3 players already commanding 80% of the market, I don't see the consolidation improving from there on. And so which is why I believe that price erosion should stabilize at the -3, -5% levels. We're already seeing that happening. I think in the last at least a year or so, price erosion in oral solids at least has been pretty stable, right? And one silver lining from the COVID crisis is also that supply right now is far more important to the market than pricing. So I can see pricing holding for at least in the near future. In terms of the opportunities that I see and what kind of opportunities, I did talk about complex generics. And in specific, what is interesting within this space are the respiratory generic inhalers and difficult to make complex long-acting depot injectable formulations. So if you look at I've recently initiated on the sector, and 4 of my top picks are Cipla, Lupin, Dr. Reddy's, and Sun Pharma. And amongst these 4, Cipla and Lupin are already heavily invested in your complex generic respiratory inhaler space. So Cipla has been a traditional market leader, and Lupin has a traditional market leader in India. And Lupin has built capabilities in the last few years. And I see quite a few material assets that are likely to materialize in FY21, 22, and 23. And that's a big part of my thesis. The other one where the pipeline is yet to mature is the depot or the long-acting injections. But given that we have seen a few complex injectables come out of the stable from, let's say, a Cipla or a DRL or Lupin in the past, I do believe that is also likely to be a material opportunity from FY22 onwards.
Sure. And it seems like, the market is well sniffing that itself. I was just looking at the individual performance of some of these names. The Nifty Pharma index alone from the March lows has risen about 58%. Auto Pharma up 170%. Glenmark has risen about 113%. Cipla stock performance, 71% uptick here. Lupin, 57% higher than the March lows itself. Nithya, do you sense the market is pricing in a multi-year EPS growth cycle, and which is why this under-owned, beaten down, underperforming sector has finally come to the fore, and from the March lows, you've seen the sector, see tailwinds, and the stock prices as well perform?
So I think that's what I was alluding to earlier, right? I don't think the market is as yet pricing the multi-year EPS growth that I'm foreseeing. I think what you're actually seeing right now is a flight to safety. And the point I'm trying to make is that pharma is actually more than a safe haven. In terms of the complex opportunities that I spoke about, these are likely to be $40-50 million kind of opportunity per product. And again, likely to be more than 80% in terms of gross margin contribution, right? Compare this to some of the exclusive opportunities that actually materialized in the past. Now, these exclusivity opportunities are obviously very, very, very attractive, but then the impact is actually limited to a quarter or two. I think what I'm saying is, while these complex generic opportunities might not bring you the 100 million or the 200 million for those couple of quarters, they're more likely to be $40-50 million for 2-3 years. Now, I'm actually seeing far more stability in terms of revenues and growth coming through from the US. I know we have spent a lot of time about talking about the US market and the drivers there, but I do want to leave the viewers with the point that India continues to be one of the biggest contributors to EBITDAs and EPS for most of these companies, and a strong growth there will also go a long way in supporting EPS expansion in the future.
Sure. Would you be able to talk about your stock-specific recommendations and bullish calls at Bernstein?
Yes. So I'm actually covering 8 stocks. We've got an outperform rating on Cipla, Lupin, Reddy's, and Sun. We've got market perform on Biocon, Aurobindo, and Alkem, and an underperform on Abbott India, the listed entity. So in terms of, I think, top picks, I think I would actually rate them in the same order that I just laid out. Cipla is definitely one of my top picks, followed by Lupin, followed by Reddy, and then Sun. So I'm seeing an upside of at least 20 to 20%, a minimum of 20% from the current price levels on each of these stocks. And like I mentioned before, at least on Cipla and Lupin, the biggest thesis is that monetization of the R&D investments that these companies have made in complex generics, and in addition, continued strong performance and outperformance in the India domestic market. Lupin is likely to do better than Cipla in the India domestic space. When it comes to DRL, my thesis is that at least in FY21 and 22, there is enough visibility into a lot of material launches. So while a generic Nuvaring and a generic Copaxone have been delayed, even when they do get to the market by FY22, there is still a sizable market that DRL can go ahead and penetrate and capture share. And even beyond these two, which the larger market has been talking about for a while, there are quite a few interesting assets. So Remodulin is an approval that they recently got. They have got Kuvan in the pipeline. There is Amitiza in the pipeline. Revlimid, they've got exclusivity in a couple of strengths. So there are enough material opportunities, at least in FY21 and 22 that I'm seeing. And that's the reason we like DRL, for the depth in their US pipeline. Sun Pharma is a pick more for the turnaround potential in specialty. I think with most of the operating costs already in the P&L, and FY22 likely to set a new base because Absorica is coming off patent and it will shrink meaningfully. FY21 should set a new base, and from here on, we're seeing operating margins improve with ramp up in Illumia and Secua. And in addition, I remain a big fan of Sun's execution capability in the India domestic market. They have outperformed in the past, and we believe that outperformance should continue in the future as well. So that's a quick snapshot of the active ratings on the 4 stocks that we have.
Any challenges, risks that you're still, mindful of, Nithya? Before we had this whole resurgence in pharma, there were many concerns around the US FDA and regulatory hurdles, which for the moment at least seem to be, ignored by the market.
Yeah, I think I would read too much into what's happened in the short term now. I'm actually looking at what's happened in the last 3-4 years, right? For most of these names, US is 30-40% of their P&L. So they cannot afford to not invest in the right SOPs, right procedures, right personal training and the quality function. And I think in the last 3-4 years, they've had the opportunity to make the right investments, and this should actually set them up well in the future. And in addition, at least around 2-3 years back, most of the companies, I think, have also started registering a backup manufacturing plant when they apply for ANDA at the US FDA, which means that worst comes to worst, one of the plants comes under a warning letter, you could always supply from the other plant. So at least for critical filings, my impression is that a lot of these top companies have started registering an additional plant. So which means that, again, relative to, let's say, 4 or 5 years back, the risk to new launches is slightly lower. Now, that being said, it's always impossible to predict what an FDA inspection outcome could be. But I do think that given the investments in the capabilities and automation in hiring quality personnel, I think they've at least set them up well for the future. And this should actually...
Okay, Nithya, great to have you on the show. Thank you so much for taking the time out and speaking with us today. Good to get in that perspective on pharmaceuticals as a sector.